Welcome back, everyone. I'm John Furrier here with theCUBE, your host at our NYSE studio. Of course, we've got Palo Alto and in Wall Street here at the NYSE as part of the Wired program. This is our Crypto Trailblazer series, an ongoing series featuring the leaders of the folks making it happen, building the products, funding the ventures. Our next guest, Randall Little, partner at 50T Funds. He's been on the builder side, now he's on the money side. Randall, great to have you on theCUBE. Thanks for coming in, appreciate it.
Absolutely, excited to be here.
You know, one of the things I love about this Crypto Trailblazers program is that it's like, I won't say coming out, it's more of the finally, it's happening. The IPO window's open, Dan's been on, you work with. We had successful IPOs go out here at the NYSE, but also at the same time, there's some real alpha development going on, real tech being built on the blockchain, DeFi, TradFi, so you got back end, front end working. The market's hot, the regulatory regime is positive.
Finally.
Yes, finally, yes, everyone's migrating back into the US. The global aspect is still phenomenal, scaling. What is your assessment of the market right now? How would you put this in terms of progress? What inning are we in? Are we still kind of like second inning, first inning's kind of past us? How would you peg this?
I still think it's quite early. I mean, it's better than it's ever been. I mean, the last 6 months have been some of the best months in my whole career within crypto, just given, now I feel like we're playing on a fair playing field, and it's been a long time coming where people have been saying the institutions are coming,
Yeah.
and now I think that there's enough clarity, or the clarity is starting to be put in place to allow that to actually happen. I think there's been demand for it. However, I think it's going to take longer than people think to happen.
Yeah.
In crypto, the cycle times are very fast. It's been a retail-driven market to date, and the cycles happen very rapidly, whereas institutions take a while to adopt things, and we're talking about rewiring the plumbing of all of financial services. And like the analogy that I usually draw to that is thinking back to the electronification of markets that I was a part of. I was more into the fintech space before crypto, and that has been an ongoing process for 2 decades. That's also a huge change, but rewiring all the plumbing and the efficiencies and disintermediation that crypto can bring is even a bigger change.
That's a great throwback and a call out on the electronic trading aspect. What's different now in today's market? What market forces are changed, if you could point at it? Because it seems accelerated. I mean, it's not years, everything's faster obviously, but like we're seeing that. But what are some of the market forces that are moving? Is it entrepreneurial? Is it the money? Is it the realization? Is it all of the above? What is the key force right now?
Well, there's a couple different things going on. I mean, I think just the technology itself has changed what's possible. I mean, I'll use an overused analogy, but the internet is kind of the digitization of information, crypto is the digitization of value. So if you have digitization of information, you can electronify markets and make them more efficient in a way, and that's happened. Digitization of value allows you to remove all of the steps, all the intermediation, all the credit that exists for the purposes when there's a pre-internet period, when everything was paper-based. So I think that just the technology is enabling more to happen, but I think that since the credit crisis, which I spent a lot of time.
Front row seat for.
Front row seat for. I was at JP Morgan at the time.
Yeah.
I think that since then, I think the other big force is just what's been happening with the money supply. And I think that is a profound change in everything that's going on. And I think that that's what kind of hooked people on Bitcoin, which I see is kind of the first step in someone's crypto journey usually is to understand the concept and why it's relevant, and then they kind of see everything else after that. So I think that the credit crisis did have a part in kicking off the dominoes that we're starting to see fall now, but it's, I think that a lot of what's happening now was unexpected back then, and I think things happening 5 years from now will be unexpected from where we sit today.
I love that example of the information digitization, because accelerated information changes things. We saw that impact time to get information, change behavior. But value, that's money. Right? You're talking now, it's like a lot of people want that money. You have a lot more action.
Right.
Forces like maybe even, hey, disruptive enablement happening around it too. I mean, that's motivating. I can take some territory from a young startup. Why not do it?
Right. No, I mean, it's a profound change. I mean, we're sitting here in NYSE, so I think it's a profound change for trading, but one of the easiest examples is payments. I mean, Circle has been pounding the table on this since 2020. If you can send value like you can send an email in a trustless environment, I mean, the implications of that are massive. A lot of the benefit of that has been international to date, but I think especially given everything going on in the US, a lot more of that will come back to the US as well.
I want to get into some of those forces, but I want to first get some of the things you've been working on and get your thoughts on, and share your thoughts on like how real these companies are that are going public. It's not like, you know, Johnny come lately, hey, jump on the bandwagon, ride the wave, shiny new toy. I mean, with the last regime in the US, the regulatory environment, there was companies doing some serious business. I mean, so it's like, this is like, not like, hey, it's a startup.
Well, this is the part that I think a lot of people miss, and this has been core to the thesis of our 50T funds, is we've tended to be growth stage, later stage, looking for real proven businesses with real traction. We bias our investments to where we think there will be institutional demand, where the real money flows are. I think that gets overlooked because obviously the two reasons. One was, I would say the regulatory environment and press, I would say was either neutral to hostile to crypto before. That's changed, obviously, but I think that most of the money and most of the capital going into the space is VC oriented. VCs are investing in pre-seed, seed, Series A, which are definitionally small, riskier endeavors, but they could go 50, 100x. So that's where a lot of the attention ended up flowing. And a lot of the guys that you're talking about that are more the pre-IPO stage, they're beyond those guys. They're quote unquote uninteresting, too boring, not high enough returns, so they don't get the spotlight. But I think that what's changed is what we've been seeing here on the floor of the NYSE, where now the IPO window's open. The equity of these companies is all of a sudden really exciting, whereas a year or two ago, people were focused on tokens. Now people see that there is some value to the equity in these businesses, and you get the S1s and you realize these are real businesses that are growing. Yeah,
and the numbers on the IPOs popped huge. Bullish was amazing, number, Circle was amazing. It's interesting your philosophy on the investment thesis, because you guys are like smart risk on, I call it. Like you are looking at deals, others were like, maybe their risk profile was medium, maybe off, maybe on in their mind, but not fully like looking at kind of where that puck is going. What was some of the things that moved the needle for you guys at the firm? What was that? Can you share the thoughts on how you guys looked at the decision to go after certain companies or invest?
Well, I think it's the sort of returns we've advertised to our LPs, which is we're not swinging for grand slam home runs. We're swinging for 5 to 10x, which in any normal market, those are amazing returns, but in crypto, that's a little sleepy. But in exchange for that, we're muting the downside that comes with bear markets. It still is a cyclical market, there's no doubt about it. It's extremely disruptive. And that's what we've tried to balance. And there's a huge market gap, like I was saying. Almost all the capital, almost all the focus is early stage. Once a company kind of gets to 50 million and above, the capital sort of dries up. It's a market, there's a market dislocation there that exists that was being filled by a lot of the generalist funds that were doing their first investments in crypto in 21. They overpaid for things. I would say they didn't do proper diligence and they got blown out.
So there was a chasm.
There was a chasm. There still is a chasm. I mean, we've been, when we're competing for deals, when we're buying secondaries, there's typically 0 to 1 other parties around the table.
That's good for you.
And I think that'll persist for some time, maybe another 6 months or 8 months of that, but we'll see.
The fast followers, because once you start making money, it's going to be looking good. Let's talk about some of the deals you've done. Share the successes that are out, what's coming, what's on the pipeline, what's on the roster for you.
Yes, so we have a couple things this week. We're investors in Figure and Gemini, both are which expected to start trading later this week or certainly within days. Also, one of our largest investments is Kraken. That's on the docket for probably Q1 of next year. It's been public. They're in the middle of a very sizable raise at a decacorn sort of valuation. So we're super excited about that. And we're obviously working on a couple new investments for our Fund 5, which we expect to be closing in the next couple months.
And you guys doing later stage? That's the key for you guys. What does later stage mean for you? So 50 million and above, or because of your?
I would use that as a proxy, 50 million of revenue and above, because it proves product market fit, it proves there's a real business. A lot of what happens in crypto is people have an idea for a technology, they guess at what the world needs, but you don't really know until you see the revenue and you see customers and you see customer behavior. So we're taking a much more private equity style approach to that. And we also, I think, help a lot of the companies that reach that stage. Usually they're mature in certain areas, but immature still in other areas, because the founders tend to be younger. And that's where we roll up our sleeves and help navigate the markets.
You know, Randall, I was talking to Dan, what I was really impressed by what you guys are doing is, one, you have institutional background. You have history. You're not new to the world, taking an investment approach and moving it into crypto, but you're building a Keiretsu too. You're building a community around this. So that's a huge advantage. You don't usually see a PE approach combined with an ecosystem, which by the way, the crypto market is ecosystem based to begin with. So it's almost it's almost counterintuitive. It's hard for a private equity company, the traditional PEs, to build communities, they build portfolios, that's it.
And that's the way, I mean, Dan Tapiero's kind of built the firm around that idea. He's hired a good team, I think, of people with varied skill sets. My background was more in investment banking, M&A, doing IPOs, both public markets and private market deals. So that Keiretsu idea is kind of like a natural for me in helping to help companies to think through what could be synergistic and drive that value. But then also, a lot of our companies want to get to the next stage of either going public, but how do you prepare for that? And that preparation needs to start at least 2 years in advance of when you actually want to do it.
Let's talk about readiness, because that's come up a lot, and I actually had some hallway conversations with folks, including Dan's small one, but we didn't have time. But I won't say there's a rush to go public, but there's a demand. On the demand side, there's certainly value in the equity. You point that out. How does a crypto company that's hitting escape velocity on the market side get ready? In the old tech world, clearly it was a slow roll. You get ready, you hire a firm, you got to do the things. It's a little bit of a long, slow burn to get that going. What's the accelerated path? Because I think we're going to see a lot more. What's your advice? What's the readiness plan? How do you go from 0 to 60 seconds on the speed up? What's the playbook? What's the best practice? Or is it like, what? Fingers crossed, let's go?
I mean, the easier things are things you can hire advisors for. So all the accounting pieces, SOX compliance. I mean, all of that blocking and tackling, where there's a will, there's a way. If you're ready otherwise, that can happen pretty quickly. We've seen that with SPACs, for example, where a SPAC comes in, a company gets excited, they can be ready pretty fast.
They can grind it out fast, pretty quickly.
But the real thing is the business ready to be a public company? And the things that we think about are the scale of the business and how many legs to the equity stool are there. In many cases, there are businesses that I would say they have a good feature, they have a good, one good product, but they need a real business where it can survive different sorts of market cycles. You're not dependent on one thing, and ideally you can actually model the business, because investor support is derived by the way analysts will think about it. And if you can't model the business and there's no predictability and they can't operate like a machine, it's not going to end up being a good public company.
I have to use a golf analogy since the Ryder Cup's in town this month. You got to have more clubs in the bag than one.
Right.
And to survive that IPO, which could be a couple quarters of honeymoon, you need to kind of have the muscle on the growth strategy, the finance projections.
Right.
These are the things that you were saying,
yeah,
right?
And I think that a good example of this is Coinbase, I think, has done a great job of transforming its business from a very retail-oriented trading company only into this multifaceted retail institutional infrastructure company. I think they're still doing more and more of that. But I mean, that's a perfect playbook of someone who's taken something that's very hard to model to something you can kind of model now, right?
We just call that old trick, one-trick pony. You don't want a one-trick pony. Let me ask you about the, since you brought it up, I want to go there, if you don't mind, real quick, unpacking the whole platformization. That's a common trend we're seeing in the Trailblazers series, is some of the, I would say, attractive platforms targeting finance, because there's a lot of, some call it replumbing, some say upgrade, depending on how you look at it, but it's pretty much, it's not a full displacement, because institutions will be big in this. What does that platform look like? Is there a pattern you're seeing around successful companies, because you might have to pivot from your entry-level business model, say Coinbase with retail, to a more durable. Is platforms the durability angle? Is that the moat? Or is it the data? I mean, what are some of the things in crypto that people should look at if you had to be a quick advisor?
Yeah, I mean, I think moat is very important. I think it gets overlooked. I think people, one mistake that we see in cryptos is people have an idea that they think is important, and they run ahead and build that without really knowing whether there's demand. I mean, one thing we talk about internally a lot is put the end first, and thinking about making sure that that demand will be there. So we're looking for companies that have done that work. They know that there's demand there, and that they have a core business, and then as they develop new products, they're not building, it's not a build it and they will come. They've done enough work so that they can pivot into something that works.
I think that's where I think real value add kind of shines as an investor, because a lot of entrepreneurs, we've seen the movie before, their heads down, they're jamming away, they're building, they're recruiting, they got it busy, it's hard.
Well, and importantly, most of the people building in crypto tend to be much more technical. That's been their whole background. They're passionate about what they're doing. They know infinitely more about their business than we do, but they usually have no idea what investors want out of a business. And that's private market investors, which is kind of like where we are today, but then even more so public and market investors. They have literally no idea, I think, what they're looking for. So I mean, that's part of what we try to help illuminate for them well in advance of when they hit that point to help make changes.
So tell me about the public market. I'm not really schooled in your area, so I'll ask because I'm curious. The IPO track has always been kind of like, glamorized. Hey, you go public and there's a playbook. Now there's an active private market going on the later stage. Certainly on tech, we're seeing tons of that going on. In crypto, is that happening too? And how should a company think about those later stages? Is there certain things to watch out for if I'm on a board or a CEO as they get kind of in their growth, as they come into your wheelhouse? What are some of the things that might be tripwire or you don't want a landmine or something that they could avoid or that you could share?
Yeah, I mean, I think the most basic thing is to retain as much optionality as possible, which means operating the business so that you can survive through any period. And I think there's been kind of I think a lot of crypto entrepreneurs have made a mistake in not accounting for the cyclicality of the business, over-hiring, and they kind of back themselves into a corner, and they either have to raise at the worst possible time or the business goes away. So I think that, I mean, it's obviously most easy to raise money when you don't need to. So if they can build the business so that it's sustainable in that way, obviously doing all the other things that I was describing, they're going to be in a much better position. I mean, that's
it's a little game theory there. I mean, you say,
basic.
hey, competitive strategy, game theory, optimize for optionality, keep your eye on the prize, work backwards from the outcome.
Right. Don't overhire. I mean,
overhiring is definitely
because
a red flag.
In crypto, that's the other big thing is there's shiny objects literally everywhere. Yeah. The news cycle changes every week, so people see the new thing that's up on the, they read on their Twitter, they see, I can do that, we should be in that, they jump to that, they jump to the next thing, jump to the next thing. It's extremely distracting.
Yeah, I got to play the long game.
Exactly.
All right, so what are you excited about the most right now? As we get ready, we're having a big reception tonight, NYSE Wired, theCUBE, and FinTech TV. 250 Trailblazers are going to be in town. You're in the middle of it. What are you excited about?
I mean, for me, the most exciting part is just actually seeing kind of the vision that everyone has been looking towards come to fruition, and the different sorts of people that are coming. I mean, there will be more crypto native people here that have been in the space for a while, more in the trenches building. But then you see people from BlackRock, you see people from Fidelity, actually building their businesses and bringing their institutional heft to the space. So I mean, there's so much going on just in terms of thinking about how all these businesses are going to, how it's all going to unfold. Like we've seen the Stripe announcement this week, how they're going to build their own payment network. Circle's kind of doing the same thing. Like what is the end game for all that? I mean, those are the things that we're avidly watching.
I mean, I'm super pumped. I wish I was 23 again. If I was a young gun, if we were riffing, say we were college roommates, we're sitting there having a beer, coding away. Let's say we had nothing to do, what would we work on? What would you work on if we had to do a venture? Knowing what you know, you see the landscape, what are the cool areas you see people digging into? What would we go after? Because when you're punching up when you're young, you have nothing to lose.
Right.
The scar tissue, you can go for the brass ring. What would be some of the things that we would target?
I mean, I think that, I would align it with kind of our focus, which is thinking about, where, like, what will be needed by the institutional flows as they come into crypto. I mean, there's a lot of the shiny objects, I think, are, the high frequency, all the retail trading of meme coins and things like that. But the next wave that's coming that we need to prepare for is, like, what happens when people really want to use crypto for payments? What happens when they really want to use
hundreds
it
of
to
millions
trade?
of people at scale.
Hundreds of millions of people, and thinking about how will they interact with DeFi? I don't think the average person is not going to go to a DeFi site and figure out how it all works. It's going to be abstracted away from them through an app that looks and feels like a Web 2 application, but the experience will be transformatively different. So I would look for ways to basically deliver the experience and the cost and the speed of crypto in a very user-friendly format in terms that people could understand and sign up, just like you can sign up for Revolut. You could sign up for XYZ app and access all the benefits.
It's interesting, one of the things that jumps out at me, because I'm covering cloud, I've been born in the cloud with this venture and others. From day one, even when EC2 had no custom domain support, going that way back when. The cloud was a revolution because you didn't have to buy a computer or a data center. You put your credit card down, you fool around, things would come out of it. There's a lot of similarities we're seeing between that kind of abstraction and scale, right?
Right.
So it starts simple, some building blocks, and crypto's a little bit more complicated because it's evolved, but it's a similar trajectory. I mean, it's not exactly, but it's almost like the same pattern.
It is, because, I mean, before cloud, there was discrete data centers and a lot of complexity and a lot of inefficiency. Now it's just kind of, everything is exchangeable super easily, instantly. And again, that's the same thing that we've seen with value, right? It'll become sort of like the value of, like, the cloud is the value, right?
My dad used to have a wallet that was like a USB drive. Can you imagine that? That's like crazy.
Right, or carry around floppy disks. It's the same thing. Yeah.
Well, congratulations to you guys on the success you guys have. You got some great deals. So congratulations. Look forward to continuing to chat. Thanks for coming on.
100%. Thank you.
All right. Well, Crypto Trailblazers, a lot of action. Skating where the puck is one strategy. Skating with the puck is the other, and a lot of people are doing that right now. As the world advances, the abstraction, making things simple and easy to use, that's the key part of the commercialization. As crypto and crypto infrastructure goes mainstream, just another utility, and the money, value is being transferred. Of course, we're doing our part here in theCUBE to bring that to you. I'm John Furrier. Thanks for watching.